Before watching this video, I want you to watch the previous video on market structure. Market structure is the foundation to most profitable trading strategy. This video is subjective and you're expected to backtest this before using it as your own strategy. Also, I want you to watch this video over and over again until you understand perfectly what I am teaching. However, I will not be giving out all of my knowledge on this channel. Take a little piece of this and a little piece of other great resources for your growth. I teach private sessions. You can reach out to me if you're interested. I have free signal groups. There are links below to join my free signal groups if you're interested in joining other traders as well. Okay, welcome to this video. I'll be talking about supply and demand. What is supply and demand? Like I said earlier, this video I'm making is subjective and I would expect you to backtest. You have to backtest and see if this strategy works for you. I want you to watch the previous video, that is the video on market structure, for you to have a better understanding of my strategy. If you combine market structure with supply and demand knowledge, you'll become a profitable trader. That is for sure. I will teach you a method that will make you not to stay glued to your screen all day long. This method I'm about to teach you will help you to set up your trade and for your trade to hit target without you coming back to check. Are you a day trader and are you looking to take trades while you also have time for family, for your business, or for other side attractions? I want you to watch this video till the end. I want you to hit the like button. I also want you to turn on the notification bell for you to have notification for subsequent videos. I also want you to subscribe to my YouTube channel if at all you are gaining one knowledge or the other. I also want you to drop comments. I want to hear from you. I love feedbacks. I want to hear your question. I would like to answer all of your questions. Drop comments in the comment section and I can guarantee or make promise that I will be replying you in my next video. I want to see you win. Supply and demand is what essentially moves all market prices. Supply and demand is what essentially moves all market prices. Supply and demand is a major factor for price movement. Without supply and demand, the market will not move. For example, you can see here, okay, you can see here, you can see this drop, 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 you can see this 1, 2, 3, 4, 5 candles. They are small compared to this one candle. At this point, when you're having these smaller candles, like 5 of them, okay, that is not making a big move in the market. You are having a kind of situation where numbers of buyers and sellers are almost equal. Okay, so until you have one dominating the other, that's when you see a bigger move. When sellers are dominating, you see a bigger move to the downside. When buyers are dominating, you see a bigger push to the top. Now here you can see a big push to the bottom. Okay, that is to show you the strength of sellers. All right, so supply, if supply is greater than demand, the price falls. If supply is greater than demand, the price falls. So what does that mean? You have more sellers than buyers, the price falls. Then on the chart, you say this is overbought. At this point, you say the price is overbought. Okay, then once the price is overbought, what do? You sell because you know the price is about to fall. All right, the same way when you have demand greater than supply, at this point, demand is greater than supply. So what do you experience? You experience a push, that is for price to increase, for price to rise. Then you say at this point the price is oversold. So once you have price being oversold, you buy. Okay, you buy. There is everyday news in the global economy, but price action plays a major part in regards the direction, that is the upward or the downward move of the market price. We can use this illustration to explain supply and demand. Supply is the amount available, while demand is the amount wanted. So you can say supply is your availability. You can say the demand is your want. Okay, at the demand zone, you having want, people want, okay, to patronize, people want to take advantage. At the supply zone, okay, you have supply that is at the peak. Okay, you'll be having a supply zone at the peak. You'll be having a demand zone at the what? At the bottom or at the trough. All right. Now, when price of a commodity increases, when price increases, okay, as you can see here, when price increases, you can see that buyers are pushing the market to the what? To the top. Then when price decreases, okay, you can see sellers pushing the price to the bottom. Now, the big financial institutions are the guys in control of the market. There is no retail trader that can control the market. Retail traders cannot control the market. And what the big financial institutions do is they buy, they take a buy before they sell. You can see this strong bullish candle. You can see this strong bullish candle. The next one is a strong sell candle. Okay, you can see this is a kind of bearish engulfing pattern at a resistance, okay, where price will drop nicely. All right, I'll be making another video on support and resistance. Okay, so you can say this is a resistance zone. Okay, then price drop, okay, before you have this area. This is our supply zone. I'll be sharing more knowledge about supply zone right away and demand zone. Keep watching. Give me a thumbs up if you like what you are watching so far. All right, similarly, at lower prices, when price drops, okay, buyers will demand for more. Buyers will start to demand for more. Okay, you say it is oversold, then buyers will begin to demand for more. And as the price, as there is increase in demand of a commodity, price will do what? Price will shoot up again to keep making a balanced equation. If there is no sellers, there are no buyers. Okay, that is what happens in the market. If there are sellers, there are buyers. If there are sellers, there are buyers. If there are sellers, there are buyers. So there is no point in time whereby you have only sellers dominating all day long, or all the week, or all the month, or all year round. That is not possible. Okay, that is when you have an impulsive move, you must have a correction. Impulsive move, a correction. Impulsive move, a correction. Now the correction is to tell you that you have both traders, that is buyers and sellers, in the market. All right, now some people believe trading is gambling. Trading is not to be accounted to gambling. Trading is not gambling, and gambling is not trading. If you do not understand the market flow, making profits becomes difficult. Now, understanding supply and demand approach to trading will give you an edge or a greater probability of success. The imbalance relationship between supply and demand in the financial markets creates momentum. Now, if there is imbalance, okay, you can see the amount of sellers is not equal to the amount of buyers here, right here. Okay, so this is a momentum. It creates momentum. You can see the long bearish candle. Okay, you can see the bearish candle. They are long or longer compared to the bullish candles. All right, so only trade what you see in the market. What do you see? What are you seeing in the market? That's the only thing you need to trade. Do not trade based on assumption or personal opinion. Let the market guide you through price action. You can see this is price action. This is a candlestick chart. Okay, this is a candlestick chart. You have line chart, you have bar chart. Okay, but candlestick chart gives you more understanding of what is happening in the market per time. All right, let the market guide you through price action. Like I said, please watch market structure before you continue with this video, you can pause this video and go back to market structure, watch market structure, because market structure will tell you or will explain better to you the trend you are in per time. All right, market structure will help you read the charts like a pro, and with the understanding of chart pattern, candlestick pattern, you will get the perfect market analysis. In my private coaching, I teach 6 candlesticks pattern and 4 chart patterns. Okay, now today I'll be explaining how to identify supply and demand zones. How do you identify your supply zone? How do you identify your demand zones? I said earlier, in a demand zone, you have sellers greater than buyers. That is, you have more sellers. Okay, you have more sellers, okay, than buyers. Now, when you have more sellers than buyers, what do you generate? You generate a bearish move in the market, and when you have a bearish move in the market, you have a position of supply zones. Okay, all right, now what do you need to do? First, you locate a bearish market or a downtrend. Okay, having seen you are in a downtrend, then you can locate your supply zone. So how do you locate your supply zone? This is a supply zone. This is a supply zone. Let me use the rectangle to highlight a supply zone. Okay, first you can say this is a supply zone. All right, this is a supply zone. Okay, another supply zone, you can say this is another supply zone. All right, this is another supply zone. Okay, so what have I done? You can see I picked, okay, I picked from this area, okay, to this area. All right, I picked from this area to this area. If it is on, this is like a line chart. Okay, this is like a line chart. You're having a line chart here. Okay, but in the case of a candlestick chart, I will be explaining that shortly. You'll be drawing from the upper shadow to the down shadow. Okay, so let's assume this is the upper shadow, then this is the down shadow. Okay, because the way I draw my own supply and demand zone, I pick the larger picture. Okay, I pick the larger picture. I don't like refining my zones. When you refine your zone, there are times they do not work accurately as expected. I'll be explaining that. You just have to keep watching this video and watch this video till the very end. All right, so this is a supply zone. This is a supply zone. All right, so I'll be talking about demand zone right now. Demand zone, when you have a demand zone, it is an indication that you have more buyers than sellers in the market. And when you have buyers, that is, they are pushing the market up. That is what it means. They are pushing the market up. That is, you're having a bullish trend. Okay, higher high, higher low, higher high, higher low, higher high, higher low, and higher high. You're having a bullish trend. Then how do you draw your demand zone? You pick your demand zone from this area. Okay, this is a demand zone. Yeah, perfect. Why did I draw my demand zone like this? I picked from this. Okay, this is the low of the week to the what? To the high of the week. All right, so that's my demand zone that I'll be looking for price to come to it, react or reject. Okay, I'll be looking for price to come to it. There are times price will not even come to the zone before it is rejected and it will bounce off. There are times price will come to it to test a certain area, then bounce off. All right, so this is a demand zone. This is another demand zone. Let me draw another demand zone right here. Brilliant. This is another demand zone. Okay, so you can go on and on and on to locate your demand zones. Okay, this is another demand zone. I'll be explaining shortly how to perfectly draw your demand zones. Okay, so let me draw this very well. All right, Okay, so this is another demand zone. All right, next I'll be talking about types of supply and demand zone types. What are the types of demand and supply zone? I want you to get a pen and a book for you to write. I want you to jot things down for your better understanding. And I don't want you to watch this video just once. I want you to watch it over and over again for you to have a better understanding. Now, for your supply zone, you have two types of supply zones, two ways or two means of drawing a supply zone. The first one, I call it a rally base drop type. A rally, a base, and a drop. All right, so this is the first type of supply zone. Now, where do you put your supply zone? You put your supply zone, okay, you call this your supply zone. All right, that is your supply zone. Okay, a rally, that is a push, okay, to somewhat a resistance, then price consolidates and drop. So until you have a drop below the starting point of this push, then you say you're having a what? A supply zone. Okay, so this is a supply zone. Now, how do you identify that on your chart? All right, quickly, how do you identify your supply zone? All right, here you can see price came all the way down to this point, dropped a little, then went further to the top and stopped around here. Now you can see that from the next move, you can see this bearish candle. Okay, this bearish candle dropped lower than these candles. Okay, this dropped lower, okay, than this candle. From here, from this point, let me zoom so that I can see clearly. Okay, one more time. Good. All right, can you see from here? Okay, from here you can say this is a low. Okay, like this low, you're having this low. Okay, so you can say this is a low, then this is the top. Okay, like the top here. Okay, then you're having this bounce. Okay, like a what? A consolidation phase. Okay, before this drop lower, then at that point you can say you have a supply zone. Okay, so this is a good supply zone. Let me draw that out. Okay, let me perfect the drawing. Good. All right, you can see currently I'm on the 4-hour time frame. You can see this is 4 hours. Okay, I'm on the 4-hour time frame. All right, now I need to pick this low. Okay, this shadow. Okay, the lower part. So I need to. Brilliant. Okay, now at what point will I be drawing this out? It is only after seeing these 1, 2, 3 candles, then this red candle, the bearish candle. Okay, having seen the 3 bullish candles, then this red candle, the bearish candle, dropped lower than this. Okay, so this is the starting point, this is the finishing, then you can see a drop below the starting point, then you can draw out your supply zone. Now what happened next? You can see this bearish candle closed here, while this or the second bearish candle opened here, tested that zone. Okay, tested the zone and dropped nicely. Okay, so you would have taken trade here. Okay, you can see having drawn this supply zone, what are you waiting for? You're waiting for price to come to it, test the zone, okay, and bounce off. All right, so you would have taken profit. So it could come to kiss it, test the 0% area, or test the 25% area, or test the 50% area, or go deeper to test the 75%, or even at times it would come in deeper to test the 100%. At times it will even shoot out with a little wick. Okay, to show manipulations in the market before dropping. All right, now where will it drop into? You can see here you're having a demand zone. Okay, but let me just talk about the second type of supply zone before we go to demand zone. Now the second type of a demand zone, or sorry, of a supply zone is a type I call the drop base drop. Okay, drop, price drop, you have a base, then you have a further drop. All right, so where do you draw your demand zone? Sorry, where do you draw your supply zone? You have your supply zone around the base. Okay, you have your supply zone around the base. Okay, that will be your supply zone. Okay, do we have example here? Yeah, we have a good example here of a drop base drop. You can see here price dropped, have a consolidation phase, then further drop. Okay, so until you have a drop lower, okay, before you can have a supply zone. So let's draw that supply zone. Okay, this will be your supply zone. All right, this will be your supply zone. Perfect, that will be your supply zone. Okay, which point did I consider? I took this low, okay, of the week, then I took this high of the week. You can see I didn't take this green candle, okay, and this green candle. I consider the highest, okay, here, and it happens to have the highest peak here with this red candle. Okay, you usually draw off the green candle when you are drawing a supply zone, and when you are drawing a demand zone, you draw off the red candles. Okay, all right. Now, but what is important is when to spot out which area are you taking as your zone. Okay, so you take the highest, then you take the lowest, and you draw out your zone. You can see this respected it nicely too. After this drop, price came back to retest. Okay, it came back to retest, and even, you know, once this open and closed, this red candle open and closed, you're having an imbalance. Okay, price came back, filled the imbalance, and dropped nicely. All right, dropped nicely. Okay, finally into the last low, and even broke the last swing low in the market. All right, so those are the two types of supply zones. Now let's go to demand zone. You also have two ways of drawing demand zone. You can say two types of demand zone. Type 1, drop base rally. You have a drop, price drop, you have a base, which is your consolidation phase, then you have a rally. Okay, so what does that mean? Price drop, starting from here, it dropped, a base, and a rally. So what do you call this? Sell to buy. Okay, the big financial institutions sold the market for sellers to opt in and start selling and start selling. All of a sudden, price consolidates for a few more time, and all of a sudden it buys. Okay, all right. Now, where do you draw your demand zone? You take the bigger picture, okay, from the highest to the what? To the lowest. All right, you pick from the highest to the lowest. Okay, now where are you considering for this zone? You are considering the opposite candles. Okay, the last sell. Okay, the last sell in the market before that big push. Now, do we have an example here? Yeah, we do have. You can see a perfect example of this is this. Okay, now when you are drawing your zones, there are times you will see that you are taking about 2 candles. There are times you see that you're only taking 1 candle. There are times you are taking about 3 candles at the same time. You can see here when we drew a supply zone here, we consider these 3 short candles or smaller candles. Now in this case, we are having 1 big red candle. Okay, a minute. Okay, all right, I want you to see that. Okay, all right, can you see that? Okay, so I need to draw it perfectly now. I need to go a little lower. All right, you can see. Okay, what did I consider? The last low, okay, in this area, then the high in this area. Then why am I drawing that? You can see this dropped. Okay, dropped, have a base, then this what? A rally. Okay, a drop, a base, and a rally. You can see even if it is weak, okay, this week is above this week, okay, the last one, okay. So this is the starting point, or you can say this is the starting point, okay. You can say this is the starting point. So in this case, we are choosing this one candle as the starting point for this drop, then the base, then the rally, okay. Then you can see price came back, tested the area, okay, test, then boom, okay, then to this target, okay. So you can say the first target is the what? Is the swing high, okay. This is a swing high considering the body of the candle, so this will be my first target. If I'm taking a buy from here, then which candlestick is giving me that buy opportunity? It is only this, okay. This is giving me, you can see this week is showing rejection. You have a doji candle before this bullish candle, pin bar, it's a pin bar candle, okay, which what? Rejection of sellers. Then you can have this, okay. So at this point you can take your, what's that point? Okay, this is about 1.2377 to, what's this point? 1.2377. okay. You can see that's over almost 60 pips, okay, almost 60 pips, yeah, about 60 pips, okay. You can see about 60 pips. Then what will be your risk, okay, at this point? If you are taking your buy from here, then your stop loss will be below your zone, okay. Your stop loss can be here, 1.2301. so you are risking about 30 pips to get 60 pips, okay, which is the perfect way of making your zones and making your profit in the market. Now the second type of demand zone is the type called rally based rally, okay. A rally, price rally, a base, and a rally. All right, okay, okay, let me remove this. All right, okay, what I call it? A rally, a base, and a rally. All right, okay. Price rallied up, have a consolidation phase, which is a drop, then rally, okay. So at what point do you have something like that? I'm going to show you, but where do you put your zone? You put your zone around the what? The base, okay. You put your zone around the base. Then do we have a perfect example here? Yeah, we do. You can see this rally, this is a drop, okay, a rally, drop, base, sorry, a rally, then a base, then a rally, okay. Then where do you draw your zone? Your zone is here, okay. I say you consider the opposite candle, okay. We are in a bullish trend, so you consider the red candles, that is the bearish candle, okay. But how do you draw it perfectly? All right, so how do you draw it perfectly? You take from the low of the week to the high of the week, okay. Here you can see the high of the week here is the green candle, the bullish candle, so you consider that. Then the low is this, what is this? Doji candle, okay. So you say this is your demand zone, okay. Right away you can see that price has come to test this zone, okay. Now you can see we were having a kind of imbalance here. All right, I'll be doing another video that will talk about imbalance, that is gap trading, okay. So I'm doing another video on gap trading. If you enjoyed this video, please kindly hit the like button. I also want you to subscribe to my channel to get further videos for your education. All right, so financial institutions, the big financial institutions, the hedge funds, they create liquidity patterns in the old supply and demand zones to create a new supply and demand zones, okay, for you to have, because you at some point you'll be having old zones creating new zones. So the old zones must be rejected before you have new zones created. All right, so before that you have manipulations around it. This makes it important for retail traders to strictly follow price. You just have to follow price, okay. Combining market structure with a good knowledge of supply and demand will increase your winning probability. There is no singular trade that will give you 100% win. Okay, no singular strategy. There is no strategy out there. There is no profitable out there that will make profit that will keep making successful trades every time. No, you can trade about 100 trades and have 5 losses, or have 10 losses, then maybe 90 wins, 10 losses. You could have 80 wins, 20 losses. That still makes you a profitable trader. Even if you are having 50 losses, 50 wins, it can still make you a profitable trader if you understand the knowledge of your risk reward ratio. Now, I'll be talking about golden rules for supply and demand zones that price will always respect. You can see there are some points or sometimes you have the supply zone, you draw it, price will never come to it, or you draw it, price will never respect it. Okay, you will have a losing trade. All right, so for you to have a perfect supply and demand zones, there are some rules you need to follow. However, before I tell you these golden rules, I need to give you some hints. Hint number 1, if you have a good knowledge of other blocks, this video will also help you get a better understanding of other block. Okay, there are some traders that understand perfectly how other block works. Okay, with the knowledge of this supply and demand, you will get a better understanding on other block. And if you do not have any educational knowledge on other block, just stick to this video, watch it till the end, and it will give you a better and powerful strategy that is more than other block methodology. Now, hint number 2, time frames. The higher the time frame, you can see I'm explaining on 4-hour time frame. I prefer the 4-hour time frame. It works far better. Okay, you can spot things on the 4-hour, you go to 1 hour, then you go to 15 minutes to strategize your trade. So the higher the time frame, the better the supply and demand zones. Okay, you cannot compare the 4-hour time frame supply zone to a 5-minute time frame supply zone. Okay, so the 5-minute time frame will not be more important than the 4-hour time frame. All right, hint number 3, recent zones are more respected than old zones. Okay, recent zones, you can see at this point you have this recent zone. Okay, price respected it, then you have another recent zone, price came back to it, respected it, dropped. Okay, price came back, respected it, dropped, price came back, respected it, and dropped. Okay, now at that point this has now become an old zone. Likewise, this has become an old zone. Likewise, this has become an old zone, because right now you're having new zones formed below here. All right, so hint number 5, do not refine your zones too much. I explained that earlier. When you are drawing zones, do not refine too much. Okay, like what do I mean here? Some people they can draw their zones like this. Okay, so where are they picking? Okay, like this. They are only picking the body. They are only picking the body of the green candle. Okay, so picking this body, you can see that this part, okay, price never came back to it to retest it. Okay, so that does not make a perfect sense. Okay, it does not. So you do not have to refine your zones too much. Now, lastly, the same way both supply and demand zones work on higher time frame is the same way they work on lower time frame. But you must consider the higher time frame first before considering the lower time frame. Now, supply and demand zones does not go against market structure. Okay, it does not go against market structure. That was why I kept on saying go back to that previous video I made on market structure so that you can understand what trend you are. Okay, the trend is your friend, and market structure and supply zone will give you a perfect trading strategy. Now, next topic or next subtopic I'll be talking about is 3 golden rules of supply and demand zones. You have 3 golden rules of a supply and demand zone. Rule number one, gap must be created. Okay, you can see here you have a gap here. Okay, you have a gap here. Okay, then you have this drop, you have this base, you have this drop. That is a perfect supply zone. Okay, so let's draw out the zone and extend it to the right, that we are looking for price to come back to it, test it, and see if price will respect it. Okay, so we have it drawn. Let me just, okay, to have a perfect one. Okay, you can see I consider the doji candle. Okay, this high of the shadow and this low of the shadow. So that's what I extend to this area. All right. Okay, so you have this. Now number two, okay, it created gap. Okay, so it has obeyed rule number one. Now rule number two, a valid supply or demand zone must break structure or change character. Okay, now what character do we have here, or what structure do we have here? From here we can say we have an uptrend, higher high, higher low. Okay, let's say from here to this point, higher high, higher low. Then from this point to this point we can see higher high, higher low. Then we create another higher high. Okay, this shows an uptrend. Now from here we can see, from here we have this drop lower. Okay, than this drop lower than the higher low. This is an higher low, then this drop lower. So at that point this is no longer respected. Then we are expecting a change of character, right? Okay, so that's a change of character, which makes this supply zone a valid supply zone because it has fulfilled two rules. Rule number one, it created a gap. Rule number two, it has changed character, because rule number two says it's either it breaks structure or it changes character. Now rule number three, the zone must be unmitigated. The zone must be unmitigated. We can see an imbalance here. This is the, okay, this is a bearish candle. Then we have this wick, okay, the low of this shadow. Then we have the high of this shadow. Okay, so at this point we can say we have an imbalance. Where is the imbalance area? This is the imbalance area. Okay, good. That's the imbalance area. Okay, from this wick, okay, the green candle, from the low, okay, from the low then to the high of this small bearish candle. Okay, so this is the imbalance area. So this is a perfect example of a supply zone. All right, it is a perfect example of a supply zone. It has fulfilled all the three rules of a supply zone. One, gap must be created. Two, a valid supply or demand zone must break structure or change character. Three, the zone must be unmitigated. So these are things, these are zones you look out for your supply and your demand zones. Now I prefer unmitigated zones to a mitigated zone. Okay, unmitigated means the imbalance is yet to be filled. Okay, this imbalance is yet to be filled. You can see price came back, filled about 50%, price came back, filled about 60%. Okay, at this point price came back to fill about 70%. Let's put this to see. Okay, price came back. Okay, this even filled more percentage than that place. Okay, so price, you can see we still have a leftover imbalance right here. All right, we have leftover imbalance right there, yet to be filled. Okay, so what are we expecting? We'll be expecting price to come back to it in time, either to kiss it and bounce off. Okay, or price should do something like this, come back in time, maybe to 50%, then bounce off. All right, or perhaps come back to fill 70% of it, okay, and bounce off, or fill 100% of it and bounce off. Okay, so in summary, what we have done so far is this. One, you must identify a supply and demand zone based on the above 3 golden rules. 2, you must place a trade at the beginning. Okay, place a trade at the beginning of the zone. 3, put your stop loss a few pips below the end of the zone. 4, put your take profits at least twice the size of entry. Okay, put your stop loss or your take profit at least twice the size of entry. That is, your risk reward will be 1 to 2. That is, you are risking $1 to take $2. Okay, you can see I'm drawing the supply zone again to give an explanation. All right. Okay, now this is the zone. Okay, so far we have this zone, the zone respected or has obeyed the 3 golden rules. Okay, so we can put our sell limit right here. Okay, this point is what? 1.2566. okay, sell limit right here. Stop loss will be a little above the zone, so we can say 1.2625. all right, as stop loss. Now where will our take target be, our take profit be? You can say twice the zone. Okay, that is from your difference between your entry and your stop loss multiplied by 2, then around this area. Now you can see around this area, what are we having here? What are we having here? We are having our zone. All right, we have what? We have a demand zone. So what are we expecting? We are expecting price either to bounce off from this zone. Okay, we are expecting price to bounce off from this zone, then to come to kiss, then bounce off either back to this zone, something like that. Okay, so that's what we are expecting. Now you can see that this might test this demand zone about 50% before it bounces off. Okay, so it could test about 70%, about 75%, about 100%, we don't know, or it could even break this demand zone. We are not so sure. But at the moment, does this demand zone obey the 3 golden rules? The first golden rule is that what? It must create a gap. Did it create a gap? Yeah, we can see it created a gap. Rule number 2 says the price, the zone must break a structure. Did this break a structure? Okay, we go back in time to see the previous. Okay, we can see this is a push, a drop, a push. Then this push broke this area. Okay, it broke this area. It even broke this area. Okay, it broke this area as well, and at this point we can say it even broke this area, and I will explain that in my private classes. I explain more better why I will say this has broken. Okay, this has broken, this has broken, this has broken. So can we say this is a valid? Yeah, a valid demand zone? Yes, it is valid. First, it created a gap. Second, it broke structure. Okay, no, yeah, because this is a what? Impulsive move. A what? Retracement, impulsive move. So it broke structure. It even changed character. Okay, even though it is not the starting point of this change of character. The starting point of this change of character is here. Okay, let me highlight that starting point. The starting point. Okay, you can see drop, retracement, then the final drop. Okay, so where we can say the change started from, then we have this, we have this, then we have this. So we can say around here. Okay, so we can say around here. All right, perfect. Okay, what do you see here? Drop, base, rally. Okay, the rally, okay, is above already. If you consider body of the candle to this body, okay, so it is above already. So this is a good demand zone. Now you can see this demand zone could be tested and price bounce off, or this other demand zone could be tested and bounce off. In my private coaching, I tell them a better understanding of which of this demand zone will be more respected. All right. So that is that about supply and demand zone. I just explained the summary of using the golden rule to draw your supply and demand zone. Now you should backtest this strategy with your currency pair before using this technique. You will have winning trades, you will have losing trades, and some trades will be untriggered, but you will make profits. This is a good strategy for trading, and I can guarantee you'll be making good profits using this strategy. I want you to subscribe to my channel if you're enjoying this video, and I want you to hit the like button for a positive feedback. If you enjoyed this video, give us a thumbs up so that we can know you enjoy the video. And I also want you to drop comments for me to improve on subsequent videos. Having losing trades does not make you, or does not make your analysis to be totally wrong. Okay, you could have losing trades. It is not every strategy, not all strategies out there gives only winning trades. You will have winning trades, you will have losing trades. But what guarantees profit is when you have more winning trades than your losing trades. Okay, if you have 80% winning trades, 20% losing trades, you are still winning in the market. Now, what are the basic guidelines for supply and demand? Number one, follow market trends and recent zones. You can see what we did here. This is the recent one, and this is the market trend. We have a downtrend. We are having a downtrend. We are having a downtrend. Okay, it is only at this point we can see that we have started having uptrend, then price must definitely come for a retest. Okay, because this is a push. So if you even want to place your Fibonacci, you are placing your Fibonacci from the way here. Okay, from here. Okay, Fibonacci. So you'll be placing your Fibonacci from here right to this point. All right, so what can you deduce? You can deduce that you are having price currently around your 61.8 area. Okay, price is around your 61.8 area. All right, okay, now rule number one, follow market trends and recent zones. Rule number two, volatility. The first and the last day of the week may have low liquidity, hence more market manipulations. So midweek happens to have more winning trades. Now, what session of the day do you trade your currency pair? For example, your euro US dollars, your pounds US dollars are better traded during New York session and London sessions. Okay, they are best traded during New York session and London session. Now, lastly, three, which is spread. Always consider spread for better stop loss and take profits. Consider stop loss, consider spread for your stop loss and your take profit area. Lastly, what I want to say is that you need to back test. You need to back test this strategy. You need to back test this strategy. Spot zones in higher time frame, like 4 hour. I prefer spotting your zones, your demand zones, supply zones on the 4 hour time frame. Okay, then if you spot them on the higher time frame, then you go to the 1 hour time frame to see price action. Then you probably take your entry on the 15 minutes time frame. All right, we've come to the end of this video. What is supply and what is demand zone? All right, we can modify stop loss, yeah, as the trade progresses in the direction we chose or we analyze. Then we can modify stop loss. How do you modify stop loss? You can see here, okay, from here, okay, price drop, price came back, drop, then you have a new supply zone, price came in time. Okay, you can see, let me draw this zone so that you will understand what I said about price coming to test 50, 60 or 70 or even 100% of it. Okay, you can see, okay, I chose this one candle. Okay, I could have chosen the three, okay, but you can see the low of this is still the low of this. Okay, so this is a supply zone. All right, I haven't seen this. Okay, after this drop, then even after this, you can have that as a supply zone. It tested it for the first time with this and dropped. Okay, so it has been tested. So the second time it came back to test it, just to bring in more buyers. Okay, to bring in more buyers, and more buyers would come in thinking this should be mitigated before price will drop lower. Okay, but you can see the manipulation. It broke out, okay, with a wick. Okay, it broke out of this supply zone with a wick, and next it dropped lower below this. So what am I trying to explain here? I'm trying to explain, okay, if you are selling all the way from here, okay, so you can keep selling. You saw this, you can put your stop loss around here, although this particular one will hit the stop loss, okay, but you can still leave it. Okay, price come back again, retest, then you are still holding your trade. Price came back again, you are still holding your trade. Okay, at this point, then price drop, then you can put your stop loss here. Price drop nicely. Okay, price never came back to that stop loss area, then drop. Okay, then you can move your stop loss from this point, you bring it to around here again. Price came back, then you can enjoy your profits all the way. All right, we've come to the end of this video. I wish you all the very best.